Thank you, Paul. No, I'm. This is one of the benefits of engaging, the university with the community. You just scale your ability to reach people much more than just doing ourselves. So let me start sharing my screen, and I might take a few seconds here so we get started. How's that looking?
Looks great.
Okay, so hi again, everybody. Wellington Aesthetic. On behalf of my colleagues, Garima Sharma, Adriana Stark, and Manuel Montoya, I'd like to share a little bit about the research that we're doing here in New Mexico about place and social entrepreneurship. So today, we're going to divide this in two parts. And after I finish, my colleague Riley White will start his presentation. So at the end of the two presentations, or the two topics, then we can open for questions and discussions. And also a reminder, we'll have a couple of breakout sessions at 12:30 to specifically engage with the audience on the two research projects. Okay, so hopefully you can be there too with us to go a bit deeper on this. So the idea here is pretty straightforward. We have this research project going on, and we thought, oh, how do we present this? It's early in the morning. If we go full throttle on the academic part of it, I'm pretty sure many of you will go back to sleep. So we decided to do something a little bit different. I'll basically break it down in two parts. I will start with something really nice that the data has given us about opportunities and barriers for social entrepreneurship in New Mexico. And then later on, I'll invite my colleague, Adriana Stark, to present a little bit more about the academic piece of it and the research model that we are exploring right now. Okay, so let's get going. So starting off with our research questions, this is how we are designing and implementing this project. Have been working on it for the last just over a year now, and we spent most of the fall last year collecting data. So we engaged with almost 40 social entrepreneurs and ecosystem builders in New Mexico. And thanks to Adriana that she'll come after me a little bit later here. We were able to get to the data analysis right after that, and right now we are in that stage, what we call analysis and conceptualizations. And this is where this data that I'm going to show you is coming from. So it's very exciting. We can start to see a lot of nice conceptualizations and connections that's emerging from the data. Okay, so this is mostly a qualitative. It's actually a qualitative research project, and we're letting the data, emerge and tell us what's going on here to answer our questions. So, as I said, let me break this down first into opportunities and barriers, and we're able to find both opportunities and barriers in four major themes. I call them themes that emerged from the data. So resources, industries, legislation, or policy, and business to business and business community engagement. So under each of these themes, we have sub-themes, we have topics that have emerged, and we are making connections now within and between each of the themes. For the sake of time and the space, I can't possibly go over all of these in a few minutes, but this is one of the good things about the breakout at 12:30. We can explore this, we can go deeper in each of these themes and see the relationships and descriptions that are happening in each of them. Okay, so let me show you some of the descriptions of these themes, and I'll focus just on 2 of them for the sake of time, but please, we have all of them going on right now. So we'll come back to this at the breakout session, okay? And also, I will just touch on some of the connections and the conceptualizations that we're working within these 4 themes, okay? So as I said, we're doing now some of the analysis within each theme and between themes. This is where things start to get really interesting. The nice questions start begin to arise from the data, okay? So let's start here with resources and barriers. This is what I call a description of the results. So it's just a snapshot, but I really would like to focus on this first one here just to start this conversation, right? So entrepreneur capabilities or mindset or leadership. So this has been said, or the data has given us, as a theme that has been a barrier, right? And within it, you can see some items, and I can point you to this one here. So entrepreneurs lacking the knowledge to access business support ecosystem. Okay, if that's a barrier, how is that now becomes? What's the relationship between that and the other, items in each of these themes? So that's what we call the conceptualizations that are going on. So just to give you an example, financial resources also emerged as a barrier, and within it, access to capital. We just heard Vanessa speaking about this. So the question here is, so is there a capital available, or do they have the knowledge? If they do have the knowledge, why is not, the capital available? So this kind of relationships that we're seeing from the data, that starts to really now becomes more exciting than just going beyond the descriptions. So these are the kind of things that we have enough for all the themes. I could spend an hour here just on each of these. And again, for the sake of time and space, I'll just give you a snapshot, but please throw your questions and your comments on discussions and back on the breakout rooms at 12:30. And since we're talking about this first one, let's focus on it. Keep your mind on this one. I'll come back to it in a second. Let's move to opportunities now within resources. So if you look at this, again, I could spend a few minutes on each of these, but I'd like just to focus on this first one again, support for entrepreneurs. So now we start to see something very interesting, right? So entrepreneurs lacking knowledge about the support system is a barrier, but at the same time, it comes up as an opportunity, meaning what's happening here, right? So what's the conversation here? Do we have the support? It is not just being effective enough, or we don't have that support. If we have the support, what's happening between the two? Why people are still saying that lack of knowledge of the business ecosystem is still a barrier, and at the same time that we have a great support system? So there's a gap there, right? And that's one of the things that it takes this beyond the descriptions, and the conceptualization starts to emerge from the data. Look at this comparison here. So remember I told you to pay attention on the first one. So if you look at the entrepreneurial capabilities being a barrier, and at the same time support for entrepreneurs is an opportunity, and I'm assuming we have many of these already in New Mexico doing a great work. But so what's going on here? What is this gap? Right? So how do we close this gap? So these are the kind of questions that are arising now in our data, and these are make great research points to test this, experiment with this, see what's really happening here in the field. Okay, so same kind of line of thought we did with business community engagement, and this is both business to business and business to community engagement at the same time. So few themes that have come up, emerged from our data: lack of collaborations, right? So it's being seen as a barrier, resistant to change, siloed protect efforts. This one is quite interesting: negative connotation of entrepreneurship. And by the way, when I say entrepreneurship here, I actually mean most of social entrepreneurship, just for saving some space here on my graph. But look at this code. I'll give you a few seconds to read it. That's how interesting this is. So this is fascinating. You know, if we want to use business as a source for the good, for change, you know, how do we work around this? Is this something that across the board? How is this manifesting itself? So again, let me ask you to focus on this first one, because I'm going to do the same analysis comparing the barriers and opportunities in the next slide here. So again, business to business engagement and business to community engagement. Opportunities. Look at the first one. This is fascinating, right? Collaborations, especially the high engagement ones, types of mentorship and sharing best practice, they have emerged now as being a great opportunity. And why then we're not doing it? Or are we doing it, but we're not doing it well? Okay, so I'll do the same, raise the same question that I did before. If lack of collaborations is seen as a barrier, right? And collaborations, especially the high engagement ones, is seen as an opportunity. And I'm sure this is happening, right, already. But how much is it happening? How effective it is? So what is this gap here, right? How can we close this? Who's supposed to close this, right? So again, just a couple of many questions that we have seen come up in this analysis that we are right in the middle right now, and we're excited to keep going with this. Not only we have these gaps within each of the themes, we can expand that to combine relationships between themes. So if you look at this, I just talked about this gap between, for example, entrepreneur capabilities and support for entrepreneurs being something that we could explore more. And I just showed you the last one here on this lack of collaboration and collaboration being at the same time a barrier and an opportunity. We have also this gap here between themes, between business community engagement and resources. So these four gaps here are basically research questions that we have seen in the data right now. And again, for the sake of time, I just showed you two of the four themes, and we have the same going on for legislation or policy and industries, the other two themes. Again, at the end of Riley's presentation coming up, and at 12:30 in our breakout rooms, I'd love to get your feedback, sharing your comments on this, and engage in some more discussions, because we're excited what we're seeing on the data. At the same time, we have so many questions now, so hopefully we have some more engagement later on. For now, I would like to call on my colleague and soon to be Dr. Adriana Stark to discuss and show a little bit about our academic piece, the part that we started this whole thing just over a year ago. Adriana?
Thank you, Wellington. So as Wellington mentioned, we gathered an extremely rich data set, and we've been able to look at it in a few different ways. Wellington went over some of those practical place-based barriers and opportunities for social impact in New Mexico. And now I'm going to briefly share with you this abstract framework that we've been developing as we analyze the data with the question in mind: how does place show up in social entrepreneurship? This is a tentative framework, so it's our hope that by sharing it here today with you, we can get some preliminary reactions on it during the breakout session. Now, this framework is illustrating two main concepts of place and social entrepreneurship, one being the tensions in place and two being the social impact. As you can see, we've identified tensions in place as being either paradoxical, which the actors see opposite yet interrelated elements that exist simultaneously, such as with that yin-yang symbol. Or two, there's a contradiction, where actors see competing choices, but not necessarily the relationships over time and space or across people. So it's visualized with the scale, and there's that balancing act that goes on. Now, then we focused on coding social impact, and we coded impact as place-based, meaning it's specific to New Mexico, or placeless, which doesn't mean an absence of place, but rather it means general to any place, not necessarily just New Mexico. And we do view both place-based and placeless impact as important impacts, but in different ways. For example, place-based impact is unique. It's brimming with idiosyncratic social and cultural relations. It's deeply intertwined with the place identity, including that place's past, its heritage, and its authentic self. Whereas placeless impact, on the other hand, is efficient and it's decoupled from the past, especially the painful histories, so it doesn't necessarily carry the ills of that specific place. And it's similar across places and thus is transferable. Now, we noticed that when people viewed tensions as paradoxical, they spoke about their impact as being both place-based and placeless. Whereas when people thought about tension in place as being contradictory, they focused only on place-based or placeless impact. Staying at that level of contradiction likely transfers to organizing social enterprises that address narrowly defined issues, and hence social impact is either one or the other, place-based or placeless. As opposed to being in the paradoxical level, where actors likely organize their social enterprise that address and adjust for complex issues that are both place-based and placeless. Now, we want to give you some good examples to help highlight some of these components of the framework. So if you can go to the next screen, Wellington. Thank you. Okay, and click once more. All right, in this first example, we see the paradox where the participant speaks about New Mexico as being both rooted in tradition, but simultaneously progressive freethinkers, what they term as free-thinking traditionalists. Whereas in the quote below, there's the contradiction, and being rooted in that past directly opposes progress, and one can't be done without the expense of the other. Looking at some of the examples of impact, in the top we see a place-based impact. Yep, thank you. And that impact is directly tied to New Mexico, New Mexico's history, its heritage, its people, and the place. Whereas in the example below, we see a place-less impact, where the impact is really general. It's about adding value to the supply chain, which really can be associated with any place, not just New Mexico. Now, we'd love to get your questions and feedback about some of these preliminary ideas, and they are still very much taking shape in our mind and our data. But given the limited time here today, we'll reserve time during the breakout session at lunch to discuss the framework further with Dr. Garima Sharma. Back to you, Wellington.
Thank you, Adriana. Yes, just so as Adriana said, we're really looking forward to discussing this with you all, either before Riley's presentation coming up now or at 12:30 at one of the breakout rooms, okay? So with that, and we're really glad that we came before Riley, because you can't top Riley's presentation. So Dr. White, take it away.
No, thank you so much, Wellington and Adriana. You guys were fantastic. That was amazing. And I have these are tough shoes to fill. But with me today, I have let me bring up my presentation here. We're going to look at impact investing, and hopefully the slides won't give us any trouble today. We're going to look at this, and this is and with me today, who will also be presenting with me, is Edith Linares Santillan, my co-author on this. Well, she's helped me with the project so far. We have another co-author, Abigail Hannock, who is going to help us with the paper itself. So impact investing in New Mexico. We're going to kind of get an overview of this and see where we are today. And what you'll find is this echoes many of the causes of hope, but also the causes of concern as to why it hasn't taken off as much as it should have. And so let's talk a little bit about this. Let's get into detail. Let's see what we can find out. And so let's talk about the universe of impact investing. What does it mean? Why are we here? What are we doing? So the investment practice, and the simplest way to think about impact investing is to think of it as an investment practice that focuses on generating, yes, we acknowledge financial returns, but also acknowledge social and environmental benefits. And the combination of both of those things become critical drivers. Now, here's the tricky part. It's become very confusing, especially for us people in finance, because there's a lot of different terms floating around. We have, for instance, impact investing. We have socially responsible investing, and we have environmental, social, and corporate governance. So if you're designing a portfolio as an institutional investor, you might be familiar with ESG, metrics to look at and evaluate companies. And if you're an entrepreneur, you might be focused on impact investing and social responsible investing. And really, we're talking around the same thing. They're almost, and there's been many papers out there that have created hierarchies around these issues. I want you to think of them as Venn diagrams. They're interrelated topics. We're not going to focus on nuances. I'm not going to call anyone out for calling SRI, ESG, or ESG impact investing. This is an inclusive scenario. But anyway, impact investing itself is something that has come to the forefront in recent years, but it has an extensive history, actually. Think about thousands of years ago, even the Hebrew word tzedek, which means justice, refers to, in many cases, which is also a root word of the word tzedakah or charity, that creates a sense of belonging, place, and purpose with regards to investments. And even in the Quran, riba, or the idea that people can be exploited in investment decisions is a key point. Since societies have existed, we have acknowledged the importance of impact investing. And to give you a sense of how big this is and what focus of this, we have between 23 and $80 trillion of global investments that have been filtered through impact filters right now. Now, the hard part is, let's drill down to New Mexico. Where are we right now? What is the status? So what does impact investing mean for New Mexicans? And here, and I want you to think about this, and I want to echo, of course, the fantastic presentation from Vanessa Roanhorst, who really underlined it really, really well. Impact investing has always been in New Mexico. We just haven't really called it that or viewed it through that filter. We have an ancient history. Think about water in this place in New Mexico. Think about how societies have always come together to share and build resources around developing water. From Puebloan irrigation systems to later Spanish acequias, or as Jose Ribera referred to them as water democracies. New Mexico has always understood the value of community-engaged engagement, community-engaged investment, over necessarily just the aspect of profits itself. It is fundamental to the survival of a community. And so what we did, though, we were really interested, and one of the big questions is that we've always floated around is, we have all of these people here today, and you've all done fantastic things for impact investing, social entrepreneurship in your communities. How do we build and create a scenario, especially under the lens of what does the big money do? What do the people who control the wealth and fund and asset managers do? What do they think about this? Think about steering a battleship. Where is finance going? And so what we did is we just went out and we decided as the first step in this project, we're going to go out and ask people, what do you think about impact investing? Where are you right now? How do you feel about this? And so we did. We sent a survey out to 151 investment professionals in the state of New Mexico, and received about 31 responses. And you're like, well, that's not very, 31 responses. What is that? It's statistically significant because it's greater than 30, right? But respondents, these respondents were not, I mean, these respondents collectively manage in the state of New Mexico $85 billion of wealth, $85 billion of wealth, right here in firms that are headquartered here. And through firms, and many people belong to, a few people belong to firms, many people belong to firms that are outside of New Mexico as well. They represent over $2 trillion of investments globally. 65% of participants recognize that impact investment in New Mexico was still in its early stages. Okay, but participants concluded that even though we look at New Mexico relative to the United States, despite our history, despite this history of place, impact investing is slightly behind compared to the rest of the United States. Now I'm going to send it over to my co-author, Edith Linares Santillan, to present the next few slides.
Thank you so much, Professor Riley. Well, in this slide, we learned that the important idea when it comes to impact investment was the 74% consisted that investing to make a measure social and environmental impact was the most important. 52% suggested that the selected firms with social conscious ideals among firms with worthy risk returns characteristics was more important. Next slide, please. We asked the question, when you make an investment decision, how important are each of these characteristics? We learned that profits still dominate values. Social and environmental impacts are secondary when it comes to making profit decisions. Next slide. How important is impact investment to your firm? 57% of professionals agree that impact investment is equally or more important than other firm goals. Our next question asks, how important investments to you individually? We find out that 84% of our finance professionals agree that impact investment is at least the most important as financial goals to them. Next slide, please. We asked what kind of returns investors expected from impact investment products in the next 5 years. 48% of participants agreed that investments will be equally risky as other investments. 26% of participants thought that investments returns for impact investment will be greater than investments of similar risk. Next slide, please. The most important motivators behind the investment strategy are the commitment to firm ethics, superior firm financial performance, and client demand. Next slide, please. And the greatest challenges to inhibit the growth of impact investment in New Mexico are lack of knowledge and expertise, clearly defined of rules around impact investing, and the challenges that quantify and demonstrate the results of impact investment. Next slide. And why is this survey important to New Mexico? It is the first survey in impact investment in New Mexico. In a survey, more than 63% of investors include the New Mexicans need to create clear incentives around impact investing, greater learning and educational opportunities, and more well-defined principles. According to one of our questions asked in the survey, 90% of the participants agree that looking ahead in 10 years, impact investment will be essential in the future of finance in the state of New Mexico. Back to you, Professor Riley.
Awesome. Thank you, Edith. Oh, I'm so sorry. I know, of course, you saw the slides and we're like, these slides are very small. And I've got a bunch of feedback saying your slides are small. We corrected them, and this format is apparently working a little better. And I appreciate so much your patience. We've been on Zoom a year and there's still fun surprises to encounter with this. So anyway, decision-making, let's think about this. So we've kind of analyzed this. What Edith went through was a bunch of very interesting results, right? So we know that despite, for some people, it's still, for the powers that be, money making is still more important than social impact. And that's a very interesting point. Yet, when people are asked, or when the question is reframed to refer to them individually, the people say, yes, impact investing is important. And this is one of those disconnects, right? We have a disconnect when we say something and then we do something completely different. And there's a lot of pressure on this, and there's a lot of factors on this. And so one of the issues that we came up over and over again was from, or the feedback that we heard, especially the open-ended questions, were how can we work on improving our decision-making process for impact investment? And by that, they mean not just social impact investing in its primary definition, but SRI and ESG as well. How can we evaluate and present and invest, and what kind of standards are out there? And there's so much confusion around this right now. So no single decision-making process exists. And I want to reiterate this, that as discovered by many of the social entrepreneurs who are with us today, that each decision becomes ultimately situational. But Grimm and Berkowitz in 2020 came up with these 4 avenues of decision-making: defining specific goals, evaluating options that are available, deciding on a course of action, and then reassessing, and of course, reassessing whether that impact actually happened. And so let's think about what some of these things mean. So defining goals. An example of goals here, I know this is super tiny to read, but that's okay, because we'll go through it. This is an example of environmental, social, and governance things. Impact investing is also associated with values as a whole. What are your firm values? Identifying those values will make you better investors. And those values could be climate change, like such air emissions, air quality protection. It might be social, providing adequate or affordable housing, consumer privacy concerns. It might be governance, antitrust violations, fraud, oversight of strategy, reporting transparency. All of these things represent bases from which you can create meaningful change. And think about New Mexico as you go through this. What makes New Mexico so important, so valid, so interesting? Evaluating options. So investors, so one of the things that we heard over again was we don't know, we see a bunch of information out there. We don't know what to trust or not to trust. And I would say that your cynicism is an asset, because your cynicism will help you prove, and I need you to go, not be too cynical to consider this is not worthwhile and engaging, but be cynical enough to question and evaluate whether or not differences are actually happening. So for instance, many company disclosures are out there right now. They use GRI standards, CSR reports, very common. They're often initiated not because the companies themselves initiate them or choose to from their board of directors, but they're often initiated at shareholder requests. Looking at ways to filter companies. The first is called inclusionary screening. This is basically rewarding firms that do good things. So the idea is you invest based on companies that have focused on these particular values or principles. The tricky part is ratings become often subjective. People will look at a third-party rating source and evaluate, oh, this is a good company. Why is it a good company? Understand those metrics and understand the criteria behind it. The next is exclusionary screening. Exclusionary screening excludes firms with these undesirable characteristics, right? We want firms that do this, but not this. And that's very interesting, right? So, but one of the issues is we have a lot of larger firms, conglomerates, right? They might invest a lot in things like oil, but they might invest a lot in clean energy. How do we separate this? Look at the supply chain. Look where the money goes as well. Look where the money comes from and where the money and where their products come from and where their products go. And be ready to sort of balance based on your firm standards of what represents investment pragmatism over investment perfectionism, and establish what represents a guide towards progress. Now, impact investing has some other things in this as well. So the first is that we often think, especially from the social entrepreneurship and impact investing overlap, you can go in and say impact first is the most important characteristic for gauging my investment. That's considered concessionary. Finance first and impact is secondary is considered non-concessionary. But be clear that you're setting clear, reasonable, and achievable benchmarks. If you're looking at impact funds, they typically maintain higher than average fees overall over the last few years, higher than average fees than other funds that are out there. These can be reduced, and these are going to gradually come down as the market becomes more competitive. Now let's think about this. When you make a decision about action, and especially as you operate in the field as fiduciaries, providing clients the highest possible standard of care, document your decision-making process. That becomes an artifact of note, not only for your company, but also for the future, so that when you go out and you evaluate your decision-making process and explain this to clients, you come from a position of expertise and evaluation. And then always reassess. Monitor progress against your benchmarks, financial and impactful. For instance, what progress you made in finance? What progress did you make and the impact that you were trying to achieve? And how are you measuring that progress? And how will you standardize yourself as a firm and evaluate progress? And also ask yourself the question, do the incentives align with the goals? Listen, communicate, respond with management, open those avenues for communication. Now, when you think about this as a whole, impact investing remains in a very early or a nascent stage here in both New Mexico and the United States. And I think that greater experience will provide greater clarity, greater guidelines for us collectively. Community resources are needed to provide context and direction for these investments. Also, we're seeing now in finance, you can see a tangible thing. When we're, CFA Institute panels from 5 years ago versus today, it was like, oh, impact investing, ESG, that's fun, but why should I do it? Now clients are asking for it. So both in your position as a client and in your position as being able to anticipate client demand, look at how your firm's role exists with respect to impact investing. And there will be a push towards standardization. Whether the SEC requires some level of reporting on that in 5, 10, 15 years is unknown. But in the meantime, prepare and be able to justify these decisions. In the meantime, help develop your firm, make sure your firm has clear standards of practice, focus on values that you consider important, and provide clear context and direction for clients. And that's the first step of this. And this is probably the most accessible part. I avoided all the theory and the math stuff, but this is really fun to talk about. And I want to do a special thanks to John Mertz, who was so kind in allowing us and funding our project, UNM Anderson, Sunny Gokhale, the president of the CFA Society of New Mexico, who always is open for feedback and context involving anything financial, the CFA Society of New Mexico, and of course, Dr. Wellington Spetic, and the financial professionals who helped develop our research throughout this time, and as well my very awesome, brilliant co-authors, Edith Leonardo Santillan and Abby Hannock. So thank you both so much for this. All right, let me get out of this share screen thing and then we can go to questions. I've lost my bar. There it is. So thank you so much. Oh, good. You got to catch up on that.
Riley, there is a question. Does the social return of investment, I'm not quite sure how to read this. Beatrice, you may want to reword it. Marry the financial part with the impact for social entrepreneurship companies. So
that's a very question. Beatrice, that's a fantastic question. So when we think about this, and this is the hard part, and you're like, how do we merge these two things? And finance is very strange, right? It's almost like speaking different languages. And one of the coolest parts about having all of you in this discussion right now is we have people from entrepreneurship, people who come from other parts of the financial sector, and explaining social impact is old hat. You just kind of feel like this is good. But also, what interested us in this presentation was looking back and saying, let's look at how we can steer this battleship, these billions of dollars of capital. Why aren't they listening? How do we approach them and speak their language? And the idea is not only do we have to be not only can you be, it's not being overly pragmatic, I think, as much as it is being incredibly expedient by how you refer to or how you act with regards to impact investing. If you can refer to this social impact as not just doing a social good, but by the way, it is a righteous and also a way that these investors can make money, and the people who own these firms can make money. Now you've captured the attention of people who make money in the industry. And the hard part is making that connection and driving forward into that situation. It's really good question. I'm reading a bunch of questions here. I don't know. I know they're both for social entrepreneurship in Wellington. I don't know if should I just read them, Genevieve, or would you like
to
caveat or add them? So we have some really good ones. We talked about opportunity zones. Yes. So opportunity zones represented a nice discussion here about how and opportunities, of course, I remember when we were first approached by this a couple of years ago and said, listen, there are these opportunity zones. And of course, Albuquerque, we have an opportunity zone there as well that can evaluate this and looking forward to this. Now, opportunity zones provide certain economically distressed areas with a potential for investments. And this also is one of the interesting things about opportunity zones is it presents a carrot for would-be investors to invest in areas that would normally not be attractive to them. And this is like a capital gains tax incentives. I think you defer it for a number of years. And I think that this is also a fascinatingly robust and interesting way of evaluating this. Right now, we don't have enough data to say how effective this was. And then with the addition of the pandemic, you have this big economic drop-off in the last year that we have to account for. But I think that's going to be an absolutely important ground for research in the coming years.
So there's a question, the argument for minimizing risk is diversification. How do you wake up people to the risks of climate change?
Is that Steffi's question? Oh, Steffi, that's a great question. So in diversification so a good example of this is to question, there is the question of what represents a good short-term investment over a long-term investment. And for many impacts, when we consider investments in the long run, consider portfolios of stocks, you want to invest in firms that'll be around, not in a day trading scenario, but 3, 5, 10, 20 years around. And if you ask yourself what the universe of companies will look like in 20 years versus what they will today, and if you ask yourself what those companies do and what the people and the generation that values investing in those companies do, that will help position your portfolio for the future. So basically, it's setting up a portfolio based on the standards you see down the line happening rather than the standards that are here right now. And I think that is an effective way of addressing that issue. Because if you look at this, it is possible, for instance, especially in climate change, that we've reached, as one analyst pointed out, perhaps maximum consumption of gasoline, because we have all these companies are going to electric, all these other things. It's likely in some sense that if I'm just viewing this from an investor's perspective, if somebody were to start an oil company today, the attraction of that investment is less than what it would have been 30 or 40 years ago. Now, if you since carry that forward and say, well, what is, and I'm not, there's good companies and bad companies in this, but you also have to think about what companies will be driving profits, returns, and other things in the future, and that will steer the market as a whole. It's a great question.
Here's another question. Is social impact investing with EDOs more effective at creating long-term sustainable business than channeling funds directly to the entrepreneurs themselves? Is there any data about that?
That's a really good question. I don't know, and I defer, of course, to my distinguished colleague, Dr. Spetik, about entrepreneurial questions. But it's a really good question.
I'll do the same, Riley. I'm not familiar with that one, and if any one of my colleagues here in the call want to jump in anytime.
So regarding EDOs and social impact, and I don't want to hug the I don't want to hug the mic or feel like this is a thing. But with EDOs in general, that's a really good question. I'm unaware of research on this, but I can investigate this. And we think about efficacy in creating long-term sustainable business. And the difficult part is we're still deciding what efficacy means regarding that question. And so that is a fantastic research question. But we have to evaluate not only if we have the data, but then figure out a systematic process. I think Marco, you've just found another research paper for us to do in the next year. I love it. I love it. Good.
Another question. How much progress has traditional investment firms made with offering impact investment portfolios? Do you see them starting to get competitive pressure to offer them as a regular part of their products?
So yes, so that's a fantastic thing. We've seen so finance is always a little bit behind other fields in some respects, right? We know that, when somebody thinks of a good idea or thinks of ESG, we're very happy. We're like, we'll see when it makes money. And then we come back into this, and by structured finance, I'm talking about wealth management, asset management, people who are out there managing funds. And we've seen an increase in interest in client demand over the past 5 years that have been really, really extraordinary. And that's been driven by clients saying and asking questions. Now, that in turn has helped provide a context and a purpose for people who are specializing in ESG itself. And so we're developing each year, our expertise in this gets bigger and bigger. But it also relates back to investors. Investors are also demanding more. The space is becoming more competitive, and investors have to ask questions like, okay, if I'm part of this fund or I'm part of this other thing, how do I know that my impact is meaningful, and how do you evaluate those metrics? Which is why these questions are so interesting, because you're now forcing, you can't lazily create a series of funds that are like, they're companies. They have clean in them. They have clean in the name. Yeah, it's very good. You have to really think about ways that they do and impact their communities that they invest in. And that level of conscientiousness is really investor driven, and that's encouraging the growth that we've seen in the last few years. It's a tremendous question. It's a great question.
Wellington, did you want to respond to that from the business and social entrepreneur side, how that's going to impact New Mexico?
Honestly, if you're focusing just on our part of the research, yeah, we didn't look at that, and I would likely prefer to defer to some of the people on the finance side, because that's one area where we don't focus on our topics in the research part. But something that we found interesting in our data is this idea of this constant access to capital is a constant, it's coming up all the time as a barrier. And when we look at those saying that it's a barrier, and the question is always this, for us in this research, that the question was, again, is it because it's not available, or it's available, but those providing have certain types of criteria, right? provide those funds. So it's almost like a power struggle between different cultures, if you will, in the state, where, and Riley can attest to that. The providers or those holding the funds, tend to be a certain group, and there may be a cultural clash in some, so the question is it hard to access because there isn't, or is because there are other factors involving the access and there's actually money available? So that's where we are right now, and we have a framework that's exploring that, and I'll be glad to open my drawing board here at some point and go with you over those relationships. Yeah, that's where we are finding this connection.
And we'd like to invite participants in this to speak up, to add to the chat, to give us your experience and share your resources. I see a few resources in the chat. This is an important topic. How do we marry business and money to build the social good? And of course, our focus here today is on New Mexico, but how can we bring that nexus of capital and consciousness to our business community to help create the world we want to live in, which, what I'm hearing needs to be just and kind and sustainable. So please jump in if you have anything that you'd like to share or say. Okay, then what I'd like to do is invite Wellington and Riley to make final statements, and then I'll turn it over to Paul.
Sorry, I'm just reading the chat. John, do you want to jump in? I think that's a great point. I think you could, John Mertz, can you just jump in? It's a great point.
Oh,
Sorry to put you on the spot.
don't need to. Yeah, I mean, I think the thing I think is frustrating is that it is a duality. We need to have social enterprises that are investable, but we need to have that stronger relationships with those impact investors that are willing then to part with their money to invest in those good enterprises, social enterprises. So I don't have the answer to it. That's I think the struggle, and maybe there's a way, as you mentioned, Wellington, to maybe the third study is how do we marry the two as far as developing social entrepreneurs while developing stronger partnerships with impact investors here in New Mexico.
Yes, that's an awesome point, John. And it's almost like we see all the moving parts, all the parts are available. We need this glue, if you will, this something that connects those parts. And it's because it's constantly coming up as somewhat almost the same, so we're evolving kind of themes that keep coming up. So how do maybe we can help as the academia, right, to make that connection? If the moving parts or the pieces are available and we're not connected, how do we do that?
May I add to the conversation?
Yes, Kenneth, please.
Hi, my name is Kenneth Nolan with investnewmexico.us. We are an opportunity zone fund, and we're also a crowdfunding equity fund partner with another group. And so what we are seeing right now is in the investment, in the opportunity capital gains area, there's about $4 trillion in capital gains to be invested. But the opportunity zone legislation was really designed to invest in urban areas. So the investors are having a hard time making the connection between what they are looking at other investments in urbans, which are resorts and big buildings and all that, compared to New Mexico. My conversation with Senator Cory Booker, he said to me that New Mexico has a blank palette right there. You can paint whatever you want and grow in the opportunity zones, and I think investors will come. But we are focusing, much of our investors are looking, are asking for real estate investment. Well, there's not a lot of that right now other than housing in New Mexico, so we're focused in New Mexico. The other thing we've learned, and because of the pandemic and where we are in entrepreneurship, is we really need to focus in what I call ramp up investments for companies. So many companies are in such an early stage that the larger investments they're not ready for larger investments. So we need to ramp them up. And when I say ramp them up, we need to work with them to build their sales up, to bring in some major customers. And that's where we're now focusing our investment and going out looking for investors who are more the social impact idea, the social conscious. The other issue is in New Mexico, because of COVID, we have a lot of companies that are having to to pivot, and how do we help them in the pivot stage ramp up that business again, using the resources they have. And I think New Mexico is unique. Well, there's a lot of states that are unique, but the capital right now is flowing to the urban areas and the big cities, but we need to figure out how we convince them, the investors, that they need to at least put a portion of their investment into these areas. And I think with governor, or with the new administration and their infrastructure, there's a combining the infrastructure investment into the investment of what's out there with the capital gain funds will help us in that the investment will help us keep those prices of homes, for example, affordable, and that we need to have affordable housing in New Mexico. One of the things is in a project that we have in Gallup is that we were ready to build 40 homes, and it ended up that we couldn't build them because these sewer lines were too small to accommodate 40 more homes in that area. And so the city came back to us and said, are you willing to pay for that expansion of the sewer? And we said no, because if we pay for that, it knocks us out of that whole goal of making homes affordable. So I think the infrastructure, the new Biden infrastructure combined with private funds is a very good match. And I don't know how this group or how you participate in driving that, but that's been our experience.
Thank you, Kenneth. We appreciate your sharing. Anyone else have anything they'd like to share? Any other comments?
I want to point out John Mertz's comment in the chat is very important. Should the Opportunity Zone Fund here do the marketing and pitches to draw investors? And that's always been the key in finance, is we often find we do a very bad job at communicating, especially whether it's a well-intended government program or a economic program or something else that develops. It becomes an onus. You have to really get that. There's so much information out there. How do you distinguish yourself and distinguish your investments? I think I want to comment that I think that's a tremendous point.
And I would agree with that point. And one of the things that unfortunately the COVID zone or COVID situation has put a barrier is us getting to or having those major conferences where we are then face to face with those investors, and it makes it that face to face meeting is much more effective than anything we can do to pitch, because we started getting access to that audience, and in those opportunity zone conferences that were scheduled, that was the idea, is to be there, and we were willing to invest money to be there. But the hardest point is getting an audience with the investors right now.
Well, thanks to all our speakers and the research teams that presented this ever so interesting research about social entrepreneurship in New Mexico and impact investing in New Mexico. It's an important and timely, they are important and timely topics for us to begin to change the landscape of New Mexico to be more inclusive, to be more just, and to allow New Mexico to grow to its biggest and best self.